All right, we're back with you. Let's take another look at our grain trade now that we're getting about an hour into the trading session here. A little over that, actually. Let's take a look at the corn market. Our quotes are from Bar Chart, and on the corn right now, we have the December corn popping up a half cent lower. We're now trading at 474.5. We still only have a 4-cent trading range from the high to the low, including all of last night and early this morning. Just nothing going on. In soybeans, at this point, you have the January contract now 8.5 higher at 1323.5. Now, that sounds really good for producers, right? Well, you have to keep in mind, we had double-digit gains here about a half an hour ago, so they're kind of cooling off their jets a little bit. Still 8.5 higher as it compares on the table here, about 7.5 cents, excuse me, 6.5 cents off of our earlier high today. So maybe it flamed out a little bit. Now on soy meal today, you have the nearby December down $2.20 at 428.20 per ton. Soybean oil, we now have December down 51 points at 49.39. Now on Chicago December wheat, we are currently 6.5 higher at 568.25. That would be a little over a penny off of our high of the day. Interesting reaction here on the wheat, where it's coming well off of its earlier lows now. December Kansas City wheat now up 7.25. We're at 647.25. Well, that's 11 cents off of its earlier low this morning. And spring wheat is showing December 3 higher at 7.12 per bushel. In the cotton trade, we did have some firmness earlier on, and now we're adding to it a little bit. We have December now up 102 points. How about that? 80.46 per pound right now, and we're within about 13 points of our high of the day. The crude oil trade, West Texas crude, has just been all over the place. And December right now is at 81.17 per barrel. That would be up 73 cents, but it is off of its earlier high that was made, I'd say maybe a half hour ago, when it was about 90 cents higher than where it is now. So very jumpy market action here in the energies. U.S. dollar index, it's just getting pounded on today. The December futures now down 765 points at 105.950. And believe it or not, at one point it was 300 points lower than where it is now. So a big sell-off in the value of the U.S. dollar index today. The Dow Jones Industrial Average is now 365 points higher at 33,716. Wow. Big moves going on in some of the outside markets. I have Ted Seifried with us, and he's with Zaner Ag Hedge. Ted, what does it all mean? What does it all mean when you have things going crazy like that outside?
Yeah, that's all digesting the Fed's no change on the interest rate yesterday. Obviously, that was fairly bearish. The dollar, at one point down 1,000+ points and now down 775 or so. That's why you've got wheat turning around and trying to move higher. And you've got risk on happening really across the board. What's interesting is that risk on is sort of fading. As you said, crude oil, it's $1 off its lows, but it's now $1 off of its highs as well. So that's kind of not very impressive after the weakness that we've seen in crude oil over the course of the last couple of days. Crude really trying to hold on to support. A lot of people rather bullish crude oil, getting very disappointed about the price action that we're seeing. I'm going to say the same thing about corn, right? If this is a big risk on day and you've got soybeans higher and you've got wheat higher, second day in a row, corn refuses to follow along. That's not very good price action either. And the soybeans, like you said, we had double-digit gains, but, just about 20 minutes ago, we fell pretty sharply, led by the soybean meal. The thing about soybean meal is that we've got really good crush margins, and as this new crop soybean product gets to crushers, we're going to be crushing a lot of beans, and we're going to be making a lot of meal. So this short squeeze and tightness in the meal market, sort of temporary at the tail end of the last marketing year. But now we're going to start flooding the market with meal. So can these meal prices stand up to that? And oil prices under pressure on a day where crude's higher is also an interesting thing as well. So a lot going on, like you said, a lot of macro stuff and a lot of individual market fundamentals as well.
Yeah, weird things going on. All right, thanks, Ted. Sit tight. We'll take a look at livestock next. Back with you, talking with Ted Seifried of Zaner Ag Hedge. Now we look at livestock. And as we go to the futures board here, Ted, on live cattle, we are still higher across the day, across the board today. We have the December 60 higher at 184.22, February 57 higher. So I'll call it 55 to 80 higher, and that'll kind of include everything there. On feeders, you have January up $2.75, Ted. We're at $2.40.77, and that's 90 cents off of its earlier high of the day. Wow, they've had quite a run this morning. March up $2.85. And on lean hogs, where they had the big washout yesterday, now they're gaining it all back. How about that? December up $1.35 at $71.50. February up $1.27 at $74.72. That's only 2 ticks from our high of the day. So what happened here to the livestock trade? All of a sudden they're catching on fire, Ted.
Yeah, Marlon. I mean, so this is where you're seeing the risk on happening, and this is where you're seeing the strength in the stock market with the Dow up 350 or so and the S&P up almost 50. That's where the strength comes, and it lands on the cattle market. I gotta say, I'm kind of surprised by the fairly tight range, or relatively tight range, that we have in cattle. But I'm happy that we closed that gap when we gapped lower after that cattle on feed report, because bear markets or bull markets, if they're going to stay trending, they don't always fill gaps, and that's a bad sign when they don't. It's a good sign when they do. So I like the fact that we filled the gap. I like the fact that feeders are really finally coming to life after being just absolutely sideways while live cattle had advanced higher. Now we've got this sort of breakout to the upside. Do wish we were still up near highs, because pulling back $1 off the highs isn't great, and we got a long day left to go.
Yeah.
But those feeders come to life, and it's nice to see hogs having a rebound. You know, hogs tested some key resistance, they pulled back, but you know we're coming right back at it. So that's a good sign for hogs too.
Absolutely. All right. Well, now they're back where they were a couple days ago. Thanks, Ted. Appreciate it. Ted Seifried of Zaner Ag Hedge with us. Christina, back to you.